This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.
Okay, here it is at the top of the hour. It's 8 p.m. on September 24th. And I was originally thinking I was going to have to postpone this because today is my son's 30th birthday, my older son's 30th birthday. Happy birthday, Greg. I don't think he's listening, but just for the record, happy birthday, Greg. And so we had a birthday cake for him and a party yesterday and over the weekend. So we got that at least taken care of from a family standpoint, and it freed me up for tonight so I could speak with all of you. This has been a crazy week already, and it's only Monday. Before I get into the individual stocks, I want to show you, again, I do my very best to promote my weekly market reports because it's not only a good lesson on how to read the charts, but they are extremely accurate. And the forecasts are currently ranked some of the most accurate in the world right now, with over a 94% accuracy. And I think that number is about to improve at the end of this month. We'll have to see what September shapes up to be like. But this is the chart that I sent out with my line still attached last Friday at the end of the day after the market closes. I start recording, and it takes me about 15 minutes to get the editing done and the bumpers, and then Bill and Kenny, who are part of our team, what they do is they add the music to it and just kind of polish it up. And here we have a weekly market report. And if you notice this diagonal line, let me zoom in a little bit more. This diagonal line is what I drew after the close on Friday. Here, this candle right here was Friday trade action, and I said we would move lower. And look what's happened already. I said we will most likely move lower to fill the gap. We're almost at the gap fill point now. The end of the line, again, for those of you who are brand new to the way I report, I draw a diagonal line as the direction of which way I think the price is going to move, and the end of the line is the target. Now, again, keep in mind that if you are, and I know some people adjust their positions according to my weekly market report. If I say that the market's going to drop, and there's a good strong percentage that it will, a lot of people will either set their stops a little bit tighter, or they'll get out of positions, whatever it may be. Sometimes when I set a target all the way down here, sometimes on Monday morning, the market will just drop right to the target and then bounce a little bit and be on its way through volatility. But the end of the line is a target. Now, if you look carefully at this little gray box that popped up, it shows the dimensions, or that shows the actual numbers of where the line starts at 267.36. The end of the line just went away because it doesn't stay there forever. The end of the line is 264.68. So that is 264.68 is the target for the diamonds. And so understand that. Now, the other thing that I did that I've never done since I've been doing these reports is I laid a forecast line here. See down at the bottom, this red line? I laid a forecast line of what I thought the stochastics would do. I said most likely the stochastics will start to turn down. Can you see the blue line there? Let me just zoom in. You really have to see how impressive this is. That blue line, the stochastics, and what happened today is almost exactly on top of what I forecasted last week. Now, again, I have to repeat this because I don't think everyone understands the power of the group, okay? When we're looking at technical signals here right now, as we are now, we are analyzing price action, we're analyzing volume, we're analyzing indicators like stochastics and things like that, and gaps. Now, if everyone in America, and I'm not saying this will ever happen because it won't, it's impossible that it could happen, but I'm just giving you a scenario here. Let's say that every investor in the world understands that this report is accurate, extremely accurate. And let's imagine now that every investor reacts in such a way to adjust their positions according to what was forecast. What would happen? Well, the fundamentals would argue that that's self-fulfilling prophecy. You're telling people to react simultaneously, therefore it will drive the price lower. Now, I've said this many times before, I'll say it again. I do not have the audience large enough to be able to move markets. Even Jim Cramer or some analysts, some certain analysts that have millions of people in their audience, even they can't move the general markets as a whole. So don't think this is some kind of a magic trick where I have some red phone where I'm calling up all the traders and telling them to sell. I don't have that ability and I don't have that phone. But what this does for us is as we continue to promote these signals, I will admit that it does have some type of an effect with regard to maybe that self-fulfilling prophecy argument. But that's just the number of people adding their positions in the direction of the trend. Okay, we're not actually moving the markets. Maybe we're helping the markets a bit, but we don't have enough money between all of us and even another million people to be able to move the Russell 2000 and all 2000 stocks. It's just not going to happen. But I ask you to continue to promote it so that it does become the best tool available to all of us, not just as a forecasting tool, but more so as a risk management tool. Because if last week you had this in your mailbox and the market was still open, chances are you'd be at least protecting your account. Even now, knowing what we're seeing now, you could still protect your account. If you were long, if this was an individual stock and not the ETF that's representing the Dow 30, and I said to you, okay, we have to watch out for this red line. What is that? And that's the 20-period moving average. And I say, okay, well, if the markets start dropping below that blue line, rather, if it starts dropping below that 20-period moving average, that blue line, you should be setting your stops below there and getting out. Well, that's a long way down, but now instead of using it as a forecasting tool, we're using it as a risk management tool. Now, backing up, it's not unreasonable to think that eventually, maybe even in the near future, that the markets could drop or start dropping below the 20-period moving average. It's only done that a couple of times in the past year, actually 3 times. Let me back up. More times, I should say. There we go. There's a year. Well, okay, so let's take it one step at a time. Here, the markets closed below the 20-period moving average. What happened? It went lower. Here, it closed below the 20-period moving average. It went lower. On every single case, it went lower after moving below it. Now, it didn't collapse the market, but over the next couple of days, at the very least, it went lower. Then what happened? On the opposite side, when it crossed back up over that 20-period moving average, it went higher. So if in the near future it drops below the 20-period moving average, we can get out and stop ourselves out, move to cash. But what are we going to do if it closes right back up over that 20-period moving average? We'll, number one, protect ourselves against loss by getting out below the moving average, get back in to maximize our gains or increase the probability of making gains when it closes above that 20-period moving average. It's really simple as that. So that's the diamonds. Now, let's talk about the more broad-based index, the Russell 2000. I said that we would most likely move up before pulling back. Well, didn't do that today, obviously. But interestingly enough, the stochastics, even though that's a red candle, look at the stochastics. The momentum is still starting to shift higher. So I do believe that by the end of the week, the Russell 2000 will reach this pivot point once again before pulling back. You see? So it might seem like it's a conflicting argument. One, I'm saying it's going to go lower. The next market, I said it's going to go higher. Well, that's because the Russell 2000 is a more broad-based index, whereas the Dow is only representing 30 stocks. Russell 2000 represents 2,000 stocks. Obviously carries more weight. and then the Dow and the S&P 500 carry less of a weight in regard to overall investor dollars going into the market. So if the Russell goes up to this resistance area that I've identified here, then you have to, again, as a risk management tool, start to think about protecting your downside if you haven't done so already. The other thing we have to keep in mind with the Russell 2000 is that there is a significant resistance up here. You see this up around, what is that, 1731? That is a significant resistance right there that we have to pay close attention to. Because if you look at the past, when the Russell 2000 hits resistance points like it did here, was resistance, hit again, pulled back, hit again, pulled back, you will see the market pulling back from these resistance points. Okay, so let's move on quickly to the S&P 500, again representing 500 stocks. I'll zoom in. What's happened? We're almost at my target. Look at that. The end of the line being 290.21, today's low being 290.37. So we're only 16 points or 0.16 points away from hitting my target already, with this being Monday. Now, look at what happened today. The S&P gapped down. This is a gap there. Today is a long shadow candle. I would not be surprised if we even open up a little bit lower tomorrow, hit my target, bounce, and then go back up to fill the gap. I wouldn't be surprised to see that at all in the S&P. So again, beware of that. Pay attention to the signals and make sure you're adjusting your stops accordingly. Now the Qs, very interestingly enough, has already hit my target. Boom, there it is. Oh, I'm so sorry. I correct myself. It's very close, again, within pennies. The Qs, the low on the target line there is 180.95. Today's low was 181.3. So we're still a tad away from hitting the target. But again, very, very close, remembering that this is a support level right here. You see that? And the stochastics is still showing upward direction, which is, again, more bullish than bearish. So again, now that we've come close to filling the target, I wouldn't be surprised if we see a bounce after that. Not at all. All right, finally, what's left here? I have the VIX. All right, the VIX right there. I said that most likely the VIX will start to bounce. Here was Friday. Who could tell me what candle this is right here? Let me open up my Q&A box so I can see your answers. What kind of candle is this right here? And especially this one right here. What are those considered to be? Let's see, dojis. Thank you, Robert. Yep. Long shadows underneath the body, whether it be a long body or a small body, long shadows underneath suggests that the buyers are fighting back. Again, with the VIX, I did the forecast. I said most likely the stochastics was going to start to turn back up. And lo and behold, today it did exactly that, starts turning back up. Now, here's another test question, and I don't think I've ever asked this on the open live session here. What is this? What happens, or what's the signal that's generated when this blue line, the K line, crosses the red line? What signal does that generate when it goes from an oversold condition and then crosses? Okay, Richard was the first one to answer. Nathan was the second to answer, and they're both correct. It is a buy signal. So we are probably, I'm going to say, within 36 hours of generating a buy signal on the VIX. All right, another test question here for you. What happens when the VIX turns bullish? A, that's a bullish indication for the general markets. It's a bearish indication for the general markets, or you don't know. Is it bullish or bearish when the VIX goes bullish or goes up? Okay, Charles says it's bearish. Richard says it's negative. Lloyd says bearish. Robert, again, S&P bearish. Stuart, you're all right. You're absolutely right. Michael said sell SPX. Well, that's right. If the VIX goes up, that is a bearish indication for the S&P. Now, this is, if you look at the top of my chart, this is the CBOE Market Volatility Index for the S&P. The Russell 2000 has its own volatility index. I'm tracking the CBOE on the S&P because that is the one that is probably the oldest and it's the most widely followed by option traders, hence the reason why I talk about that so much. Michael says, not that I follow Cramer, and then there wasn't anything after that. Okay, what was that? Michael, I'm interested to hear what you have to say about Jim Cramer. By the way, on a side note, while I'm waiting for Michael to finish that sentence there, because I'm so curious, it's got me on the edge of my seat here now. I was in, where was I? I was in Boston, and I was doing a web presentation at the time for a group of E-Trade traders and investors, and Jim Cramer was on stage. And you know, when I get on stage, I don't really have anyone helping me. I don't have earpieces in. I'm not talking to a crew. I just leave the open mic out in the audience like I am with you now. I'm leaving it open. I'm making it available to you to ask me questions and submit symbols. Well, and I do that pretty regularly, and I'm pretty accurate at that. Well, Jim Cramer gets on stage, and people are asking about this stock, that stock. Hey, who's the CEO of this company? What do you think about the CFO of this company? And I noticed up in the balcony, Jim has a bunch of people on computers that are feeding him all the answers to the questions that were coming at him. Hey, it's nothing bad about Jim Cramer. He's a showman. He's putting on the show. He's giving good information to people. However, there's a team of people supplying him with that information. Don't think that there's one person that knows every little detail about every stock that's ever been traded or has been or is being traded. It's impossible to understand it. So just, I'm giving you a little feel for where the information is coming from. And now Michael's saying sell, 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 Cramer lingo. Okay, there we go. I got it. Now I put it together for you. All right, now that we've gone over the major indices, I would like to start taking some stock symbols. I want to get right into that because we have about 43 minutes left. I can't believe we're already 17 minutes into this. And I'm going to start with Ron. Now, some of you who are the veterans of the open house know to ask a question or give me a statement as to what you're doing with the stock. Charles, I see you just typed in SLV, but if you could add on to that, tell me, what are you looking to do? Are you looking to buy it? Do you have it? You think about selling it? Are you thinking about stop level? What are you thinking about that so I can help you better while I'm looking at the chart? I'm trying to get as much information from you as I possibly can in an effort to help you with what you need, okay? So ECYT, and this is a stock that Ron puts out, and he's looking for a good entry point. Ron, I would say right now is a good entry point. Okay, now, in a split second, I saw that because my eye has absorbed a lot of information in a split second. Again, this is the difference between fundamental analysis and technical analysis. If you're looking at a fundamental report and you're looking at earnings forecasts, you're looking at debt to equity ratios, you're looking at, I don't know, analyst opinions in a fundamental report, it'll take you basically an hour to go through everything within that report in order to get enough information to base your decision on. With the chart, you're basically getting it all in a picture, not words. You're getting it in a picture. So by looking at this, I immediately see this stock is in an uptrend. Boom, beautiful. Number two, I also see this stock is not just in an uptrend, but it's in an upward trading channel, right? Number three, I see that there's a bullish engulfing pattern that's not just engulfing Friday's range, but the previous 5 days, 1, 2, 3, 4 days rather. I also see that the stochastics on Friday was oversold. It's now turning in an upward direction and probably very close to giving a buy signal. You see that? The only thing that would make this a perfect buy signal all around is I would have loved to have seen more volume right here on the bullish engulfing pattern. Volume supports the idea that buyers are running into the market. So with that said, Ron, I like all of the evidence that's been shown so far. It seems to be stacking on the buy side. So if you do buy this tomorrow, the charts, remember what I said, the charts also give us a place to position our stops. Here's what the chart's telling us. It's actually giving us two different indications of a stop area. The trend line, it will act as support. So if you buy it at 1824 and you put your stop somewhere below the trend line, that would put you somewhere below 17. Okay, so you could put your stop there. The other thing that I notice, now I'm going to erase everything now so you can see it more clearly. You got the channel that I've already described. Okay, I'm going to erase all this, right? Erase the channel lines, erase the trend line. Now let's look at the good old-fashioned role reversal. From this high right here, I'm going to draw a horizontal line out in this direction here. Notice what has happened. Former support, a former resistance, once broken here, okay, has now turned into support here. Okay, so if this is now acting as support, I will use that support as an area to place my stop. So I could put my stop there. So if you decide to buy this at 1824, I would suggest you put your stop somewhere below 1624. So that gives you a $2 risk per share in the calculation if you're using the 1% rule. I'm not going to waste any time now with the new people going over the 1% rule. If you want to learn more about the 1% rule, go to themarketguys.com and click on the video tab. That's where I have the, I think it's a 7 or 8 minute video that explains what I've just said in detail. And you can keep hitting the rewind button until you get it. So, Ron, I like this one, and I like it so much so that I am going to, thanks to you, see my watch list right there? ECYT. There we go. I am adding this to my watch list. Now, I had a couple of people last week ask me, how do you develop your watch list? Well, there's one example right there. Someone shows me a stock. I look at the charts. I like it. Boom. I go with it. The other way is if you look on this chart. Now, this is a TD. It's like a Thinkorswim platform put out by TD Ameritrade. And you'll notice that one of my watch lists right here are the top 10 sizzling stocks. I look at this every day. Now watch, look how I do this. I start on the first one, and all I do is I hit the down arrow. See, there's a nice one. I like that one. In fact, I'm going to put this one on my watch list now too. I like that one. I'll show you why. I don't know anything about this company. I don't know anything about this. Cytokinetics Inc. But I'm typing in CYTK, not because I'm going to trade that tomorrow. Where did it go? Oh, it alphabetizes it. Okay. So I got to look for it now. CYTK. Let me go back there. CYTK. Okay. So it doesn't mean, just because I just found the stock to add to my watch list, doesn't mean I'm going to trade it tomorrow. I just like the volatility. I like the fact that it's under $10. I love the fact that it's over $5. And this one could one day, I'm not saying tomorrow, because I wouldn't buy it now. I don't see enough volume to support a breakout. But I like it enough to put it on my watch list because that's in a price range that very much might appeal to the equity traders who are looking for a cheaper stock so they could buy more shares. Now, what I will say is if you look at this pattern, this looks like it could be the beginning of a cup. Now, the handle has not formed yet, but if this stock pulls back from resistance here, okay, follow me, because this is actually how I get into trades. If it pulls back from resistance and forms a handle, Now this becomes the breakout point where I'm going to set an alert and possibly getting engaged with this stock at 9.5 or so when it breaks out over that high. See, that's how we find candidates. So again, thanks, Ron. It kind of led me to this one, but I'm going to go right to D and type in MESO right there. And D wants to own this one. And right now, I would say no go on that one. However, just like that other stock we just looked at, this is very similar in price. It was also formed a little bit of a cup with the resistance point up here. You see that? All right, now follow me. This long shadow, I'm going to throw the question. I'm going to pull out the symbol or the signal, but I want everyone to answer this if you could. What does the long shadow above the candle suggest? What does that tell us? It's a clue. What does that tell us what's happening in the market? Michael, you're right, it's bearish, but what's the story? Why? Let me expand a little bit more and ask you to elaborate. Why is it bearish? What happened on that day? Robert says the sellers came in. That's exactly right. Early on the day, the buyers started off looking like they were ready to go party, right? What happened? Hit resistance, and the sellers pushed back during the rest of the day. Here, look, here's the intraday chart. What happened there? Oh, this is kind of weird, but this is on the opening. What happened? This doesn't look right. Something happened. This is the opening of Monday. And it doesn't look right at all. I don't know what happened there, but this is the deal. Unless the only thing, oh, that's why, because that was Friday's trading action. Sorry. That was Friday, not today's trading action. That's why it didn't look right. Well, on Friday, it rallied up. Sellers came back in and pushed it down. That's one. Now, the other thing you have to watch out for on this one, right, D, is that the stochastics, it has recently on Friday shown overbought. Over 80 down here on the scale from 0 to 100, over 80 is overbought. Now, if you want evidence of this, what has happened in the past when the stock has gone overbought? Well, shortly after that, the lines cross. See this series of crossing before it tanked. Back here was a beautiful, look at that, beautiful sell signal here. This one is starting to turn down, but it hasn't crossed yet. So what I would suggest is you wait for the stock to pull back to the moving average. It actually might even be a little bit higher, around 6.5, because remember, as the stock hangs here, the moving average is going to start drifting up. So they kind of almost meet in the middle here. But you wait for that to meet and possibly bounce off the 20-period moving average, then I would get in. So that would be entry area number 1 on a bounce off of the 20-period moving average. Entrance area number 2 is if you have a little bit more patience, wait for this all to form into what might be a cup and handle, with this side being a handle, and then buy on a breakout over 721 or 725. Then the second entry point would be that breakout, which could be a run to the higher levels. So if you decide to buy, always remember, put your stop in place. That 20-period moving average is a good place to do it. All right, now, Charles, I'm going to go with you, SLV, because you're looking to buy it. Before I even talk about this, let me tell you, I have a very concentrated position in it. And every time it goes lower, I buy it. Now, that's not something I would normally recommend for anybody with regard to long-term investing or even trading. I'm just disclosing this to you so you know where I am. I have a concentrated position in silver, mainly as a hedge for my retirement. It's not to hedge against a portfolio. I just know that with silver being as low as it is and at production costs, I know there's a lot of mines right now, miners, that are being pressured to even stay in business. And that's because it's akin to what happened back in the days of the oil, the oil glut, and when prices got lower, the Texas drillers went out. They shut down their drills because it wasn't profitable enough for them to take the oil out of the ground. And the same thing is happening with silver. Now, it may not happen right away. It may not happen in the next couple of years. I'm planning 5 years, maybe even 10 years. And I truly believe I have a multi-million-dollar position here in the making. It's just a matter of time. Why? Because, look, I'm not trying to sell you on why you should own silver. I'm just telling you my reasons, right? This is back here, was not too long ago. That was 7 years ago, right there, where silver went up to $50. And what I've seen since 2014 is this. I see a very well-defined trading channel, with this being resistance and this being support. You see that sideways channel? Now, I don't know how many of you remember John Murphy. John Murphy was a technical analyst for CNBC. He wrote many books on technical analysis. I have a few of them. A great, great technician. And he would always say that the longer the base, and remember this, the longer the base, the higher in space. And what he was referring to, I wish I had a 50-year chart of silver. Silver based for a long time back here, even well before, even 2000. It channeled in a wider channel, actually. It channeled back here in a much wider channel. If I had more history, I could show you. The channel back here was wider, but the base was almost as long and even a little bit longer than what we have now. Now, the fact that the base or the channel is more narrow is actually better for the buyer. Why? Because the tighter this range is, think of it as like a pressure keg. When you put gunpowder under pressure, the explosion becomes greater when it's under pressure. Well, this narrow trading range increases the trading volume over time. And what will happen is when the breakout finally occurs, which is not far away, the breakout in this instance will only be about $20. A breakout to 20 could cause that to go to 50 to 100 on the next big up leg. And with all the geopolitical tension that we're seeing, especially with talks of trade war in China and things like that, I really can't tell you what our economic future has in store for us. But I can tell you that if history repeats itself, silver is going to be up there again, at least by $50. And I'm being very conservative when I say $50 on that one. So Charles, that's my opinion. I think going back to the daily chart will help you better. But the daily chart is showing the price now flirting with this 20-period moving average. You see this? Now there's some mixed signals here. The stochastics is starting to pull back. You see that? Now, if it continues to pull back, you could see a big drop in stochastics, but a very, very small drop in price. You see, look, support down here is right around 13.25. So you're only talking about 16 cents before the stochastics could get all the way back down to oversold. You see how that back here it was oversold? Well, back when it was oversold here, the low was only around 13.17 at that point. So don't be afraid by the stochastics. Look at the support, look at the moving average, because if you look, it's been a long time since silver has been over that 20-period moving average. The 20-period moving average has been acting as resistance, but we still have unfilled gaps above the market here, small one there. We have another open gap up here. So these gaps are going to act as up here even as 1660. That's where I have a target price to fill that gap at 1616 and an alert to follow that. My computer is going to send me an alert when silver's trading 1616. All right. So again, maybe a long analysis to a very short 3 character symbol, SLV, but hopefully that helped you, Charles. Okay. Again, Joan, I see that you put in a stock symbol, KTOS. If you could, please tell me what your intentions are. So far it looks good. I would still say this is a buy. But I still want to know what your position is. You got a roll reversal that just bounced. You had a bullish engulfing pattern on Friday. Stochastics is starting to tick up. It never went oversold here. It's because it's still in an upward sloping trading channel. You see that? So we got the trading channel going up. You got the price is starting to go up. It's bouncing off the 20-period moving average. And the reason I want you think about buying it, now that you see the lines that I drew on my chart, Joan, I'm going to kind of put you on the spot and ask you a question. If you were able to buy this, let's back up the clock a little bit, and let's say it's 5 minutes before the market closes, and you were getting ready to buy it. If you were able to buy it at 14.21, where would you put your stop? Just look at the axis, the price axis on there, and tell me where you might consider putting a stop. Let's see, I know there's a delay here. But again, if you're 14.21, thinking about buying it, where would you put your stop? Okay, would anyone else like to answer that? Okay, Joan put a comment, but didn't put a price, and that's okay, Joan, because I'm interested to hear what some of the other folks have to say. Lloyd says 13.5. I like that, Lloyd, because here's the support right around 13.68. So 13.5 would be right there. It would be below the trend line, and it would be below the roll reversal support. So Joan, you're right. Lloyd put 13.5. Charles put 13. And then you put 50. 1350? I'm assuming you meant 1350, Charles. Okay, so 1350, that's good. Nathan says 1350. Amalia says below pivot point, which again would be 1350. That's good. David is being a little bit more conservative and saying 1295. Ruben says 1335. So you all are correct in placing your stops below support. Now, again, I'm trying to throw a little bit more lesson plan into the analysis here to help everyone. Now, here is the stock that we're looking at, KTOS. Nathan and Charles and Lloyd all say they're going to put their stop at 13.5. Again, hypothetically. And David says he's going to put his stop at 12.95. So that's down here. All right, now here's my question. They all have the same amount in their trading account. All right, they all have the same amount. Those who have their stop put in 13.5 are putting their stop at 13.5, and we have David putting his at 12.95. What does David have to do in order to adjust his position to be able to limit his loss to the same 1% that everyone else is subjecting themselves to? I hope that's not too complicated of a question. I could paraphrase that and ask you a different way, but what has to happen? Here's another way to rephrase it. Out of the two, who's going to be able to buy more shares? Those who have the stop at 13.5 or those that have the stop at 12.95? Who's going to have more shares? Okay, Tom, I see the delays there. Ron and Tom are both correct, along with David. You have to buy fewer shares if you put your stop lower. Now, here's how this all works. If you decide to put your stop lower, yes, you will have to buy less shares than those who have a tighter stop. But what you have done by putting your stop lower is you're giving the stock a little bit more room to breathe. So your chances of getting stopped out are less than those who have a tighter stop. That makes sense? So, I mean, I could tell people, hey, listen, you buy the stock at 14.21 and put your stop at 11.21 down here. Have a $3 risk per share, and you can do that. But the person that puts their stop $3 lower is going to have to buy far less shares than those up here. But they might be in the game longer. They may not make as much, but they're certainly going to have a longer time frame to be in the stock if it starts going up. See, so that's the advantage of the advantages and disadvantages of actually moving your stop up to and down to those levels. Okay. All right. Now let's go to all right, Amalia, JNUG. Oh, this is a good one. This thing's a wildcat, by the way. JNUG, we've traded this one before. This is a 3 times leverage ETF. All right, so got to be really, really, really careful with this one. This one is showing some conflicting signals, Amalia. Now, what might be good entry point? I would say if the market was still open right now, I would say hold off because you have a bearish engulfing pattern there with this stochastic starting to move lower. Chances are, because this is a leveraged instrument, chances are that bearish engulfing pattern is going to force that down a little bit. And then I think eventually it'll find some support. But I would suggest that if you're looking for a good entry point on this one, it looks to me that you're going to really have to pay close attention to the technical signals and be very, very careful with this one because it is so leveraged. You're going to have to give yourself either a lot of room and buy less shares or just, you know, grin and bear it if you get stopped out with a tight stop. But the signal is not there yet. You have to wait for some type of a green candle. Now, if tomorrow it goes down, or if it opens, goes down, and closes with a long shadow under there, that could completely negate this bearish engulfing pattern. But right now, I don't like going against bearish engulfing patterns. Sometimes they don't work, like 20% of the time, but 80% of the time they do. All right, now let's go to Richard. He's looking at Facebook. And I got to back up just a little bit on this one because on Friday, Facebook had a bearish engulfing pattern, and today it almost wiped out the bearish engulfing pattern. Pretty amazing as it's bouncing off of support. I'm going to erase all these lines so I can redraw them for you. Okay. Now, Richard, you're thinking about buying it, or you're looking to buy it at 160.92. Now, what I would say there is that you see this gap down here? This was a gap up. This gap has filled. You see that? The gap has filled. If you understand or have studied my gap rules, 80% of the time after a gap fills, the price reverses. So there is still a good chance this stock is going to go up. Now, if it goes up, there are another couple of gaps above the market here and here that could potentially fill. Now, obviously, this one, if the price goes up, this one's going to be the one to fill first. But if it fills up here, then there's an 80% chance it's going to pull back from that gap fill point here before going higher. So what this does is it's going to give you a range to trade. So I wouldn't suggest you buy this one and have it fill the gap and then you hold it thinking it's going to go up to, you know, $215. It's not going to go straight up to $215. And you know, it probably sounds like I'm very confident in making that statement that it's not going to go up right away to fill that gap. But you have to understand what's happening now with the social media companies. They're under a lot of pressure from the government agencies who are investigating them. Again, I don't care what your political affiliation is. If a company is under investigation or being pressured by the Senate because they might be in violation of you know, constitutional right to free speech or whatever it may be, First Amendment rights, this could put a lot of pressure on the stock. So you got to be careful. So there is my daily chart analysis. I would be more inclined to go long the stock, but I would put my stop pretty tight below support, probably around 158. Now that we're looking at the daily chart, I'm switching to the weekly chart. Now, obviously, this is a lot different because it's a weekly chart. Notice what's happening here. This stock is still in an upward sloping trend. See higher lows. See that? The stochastics is the lowest. Let me just move up my thing here. Yeah. The stochastics on Friday hit the lowest level of 5.31, the lowest level in 3 years, which defines that as being oversold. So again, that is a bullish indicator. When you see the stochastics that low, and then all of a sudden you start seeing green candles on a weekly chart, because it's only Monday, there's no volume. But if you excuse me, but if you look at last week's volume, there was an increase in volume last week. So this week is going to be very important for you to keep an eye on that volume, because if it stays green on the weekly candle and that volume increases past last week's volume, that's going to be extremely bullish, and then this will start to cross. Now again, this is a weekly candle chart, so this stochastic is not going to move up much more until this week closes out. See, this will move in increments of week by week. But so far, Facebook is looking pretty oversold. And but yeah, it sounds crazy. It's not a cheap stock, so you got to be really careful with this one, with all that's going on, with it being in the news. And you saw what happened with Tesla, right? I mean, you got Elon Musk puts out one tweet. There's a chance this company is going to go under if they're investigated criminally for manipulating a stock. That stock is toast. They haven't shown their earnings yet. And don't think Facebook is immune just because they have hundreds of millions of people that follow them. There'll be another company that steps right in Facebook's space and takes away their market share. It could happen. Look, it happened with MySpace. You know, MySpace was the dominant social media network until Facebook came in, and Twitter, and then LinkedIn, and all the other ones started taking their market share. I don't think they're invincible. So, you know, if you get into the stock, don't marry it and say, okay, I'm going to make money and I'm going to hold on until I do. That's bad way to approach the market. Okay, MU. Now, this is one we put out as a recommendation, okay? So this is coming from Rick. And Rick, let me read his comment because I don't think all of you could see this. I have a small position bought at $43.99. My stop is currently at $43.99. So you have your stop at your purchase price. Okay, that's okay. Trailing your stop up. All right. News has been up and down on this stock because of the current tariff war. Want to know if I should stay with the current stochastics level. Okay, now we're back to a daily chart. Stochastics is still showing higher, and the volume has dropped today. The drop in volume is not good, but the color and the length of that green candle is good. Now, here's what I would say. I would say, number one, keep your stop in place. Worst case scenario, you break even, all right? But look a little bit more closely, and you'll see there's still a gap up here. That's the reason why I put my target price. See, this is my forecast from when I put out the alert. Isn't that amazing? That's my forecast. All this action wasn't here. This price action was not here when I drew this line. Look how it's following my line. The end of the line being my target is where the gap fill area is. So, Rick, I still think this stock has a shot at rallying to fill the gap. With the tariff war, you know, that's one of the reasons why the market was down today, because of the news of China and the whole tariff situation. This stock rallied in the face of a negative market today. Keep that in mind. That's actually a sign of strength. So with that said, I would keep the long position in place. Now here's how you got to play this one moving forward. If over the next couple of days it starts breaking out over the 20-period moving average right here, okay, you're going to have to move your stop up from $43.99 to just below the moving average, which would be probably around $46.90. So you'll have to move up your stop about $3, And what that would do is obviously protect and capture a $3 profit for you. So I would still keep that one. It looks pretty good. All right, let's go on to Michael Yext, Y-E-X-T. Let me take a look at this one. We bought it at 26.30. All right, so it's down below your purchase price. Now, Michael, I have to ask you something, and don't be afraid to answer this, okay? When you bought it at 26.30, where did you have your stop? Because look at how low today's low got down to, what's that low? Today's low got to 25.30. No, wait, hold on. My thing's in the way again. Okay, today's low got to 23.16. So where did you have your stop? All right, ADR is hard to trade. They're not hard to trade. You just have to trade them correctly. That's all. So I still don't see an answer. But let me tell you, if I had bought it at your purchase price, let me just could you give me an idea of when you bought it, so that way I could look at what the chart might have looked like at that particular point. Let's see. All right, I know there's a delay there. Forgive me for that. Okay. Oh, your wife bought it. Okay. All right. And she didn't put a stop in. All right. Tell your wife that's unusual, because it's usually the wives that are yelling at their husbands for not putting the stops in. All right. I hope she's listening. Now, women, by the way, make much better risk managers on the whole. All right. Well, now that the stock is down below your purchase price, let me just say this. Here is a role reversal point. So today briefly violated that support level, but didn't close below it. So what I would do, if I were you, is I would still put in a stop, and I would put the stop below today's low. So if today's low is right there at 24.61, 25.13, I would put the stop at, let's say, 25.07. Okay, put the stop at 25.07. Don't worry about getting stopped out. You have to find a way to manage risk, because what's happened now is the stock is now below the 20-period moving average. The good thing for you, and this is very good, it's at a role reversal support level, and you had very close to a hammer pattern with that long shadow underneath. That's bullish. That's very bullish. If you have more cash available, I'd even say buy more at this level. Again, I don't know how much you have in your account, but it wouldn't be out of the question to buy more. Now, the stochastics is starting to move up. You see that? And the volume is a little bit less than what I'd like to see it, but I have a good feeling that tomorrow the general markets are going to start showing some life of buyers coming in, and I think this one could very well be one of the stocks that starts to get bought up, because it's in that price range where a lot of investors, it falls in their category of stocks to trade. It's not a high price stock, it's not a cheap stock, but that could definitely be one that's attractive to a lot of people. Let me just, before I let you go on that one, Michael, let me just look at the weekly chart. I have a feeling it's going to be overbought on the weekly chart. Yeah, it is, but look at the weekly chart still, because it's Monday, it's still looking like a hammer pattern. Yeah, you definitely have to put your stop in there, definitely, because if you look at the weekly chart, you're right at that trend line. You see that? Took that low, connected to these lows here and here, and today's low touches that trend line. So if it starts breaking down below that trend line, that's why you got to put that stop in. This thing could drop all the way down to 17. It could give back 50% of what it's made here since last March. So you got to really be careful of that one, with trading without stops, that is. Okay. All right, and the good thing is, for everyone who's been listening here, Michael's wife has been buying and selling it and making money on it, so it's good. I love that. Love to hear the success stories there. All right, see, now I kind of got off sidetrack, and I have to go see where I left off on that stock. Let's see. Is that all the stocks there are? No, hold on. All right, so STX, this is David. STX for a put sale. Now, for those who don't trade options, selling puts is bullish. And this is a weekly chart, so there's still a gap below the market, so that's going to act as support. Excuse me. David, what puts were you thinking about selling? Or put spread? Which one were you thinking about selling? Because 45 is support, so if you do like a $45 put, that wouldn't be so bad. 50 put's going to be more in the money, so we'll have to see. But that's the weekly chart. Let's look at the daily chart. You're going to get a slightly different picture, probably a doji, close to it. All right. Well, last week, STX, which is Seagate Technology, not to confuse that with the company STX that provides lacrosse sticks and lacrosse equipment, but this one gave a buy signal last week. There's a gap above the market here. There's a slight gap above the market here. And there's a resistance up here around 57.5. So you got a nice little bit of range here to work with. I think right now it still looks more bullish than bearish, but you have to make sure that you are absolutely putting in a stop, or at least alert if you start to sell puts. Now, just to quickly look at what the puts are trading for, I don't like selling anything for less than $1. So let's look at the Octobers, look at the 45 puts, and there's really no premium there. So I don't know about that one for an option trade selling puts. Unless you want to get really aggressive and try to sell a $49 put and maybe buy a $46 put. If you could sell the $49 put, buy the 46 put, and do that for $1 credit, that would be something to consider, because then your max loss potential could only be $2. You can't lose more than $2 doing that. All right, so hopefully, David, that helped you, and yeah, that wouldn't be such a bad put spread, selling the October 49s point, buying the 46s for $1 credit, because that would give you a 33% return in just about 4 weeks if it stays over 49. So that's pretty good. All right, let's see. Ruben, welcome. How about SQ? I'll look at SQ, but Ruben, if you could, because we got 3 minutes left, if you could tell me what your idea is, what your plan is for SQ. That one looks more bullish than bearish. The stochastics are starting to turn up. The trend is up. You got a nice green candle. Volume is slightly down from Friday, but that's okay, because on the way down, you want to see a drop in the selling pressure. So that's bullish. I would be more bullish than bearish on this one, but the big question is, what are you looking to do? You're looking to buy it at 86? You're looking to trade an option against it? What? If you're an option trader, you have more choices to get long. But I think this is more bullish than bearish. But upside potential on this is going to be up at resistance up here. So if you do get long, I would start to get more aggressive in your selling for profit idea up here around 92. So you got roughly a $6 upside potential on that one. All right, so you think about buying it. All right, well, good luck to you on that. And I'll be watching this one. I'll put this one. This is one of those companies that also, is on the leading edge of technology. There is some competition coming up on this, so you got to watch that one. And I'm going to put SQ in my watch list because I don't have it there yet. And hopefully that's going to help you all. All right, now, 1 minute to go. Before I say goodbye and wrap things up, I just want to really put a big thank you out there to everyone who's been following along. I've been doing this for 36 years now. It doesn't get tiresome for me at all. I love watching the markets. I I don't watch that much television. I do look at a lot of news, and I try to sort through the news to find out what's true, what's not true, what's going to affect the market, what's not going to affect the market. Stay on top of the news, please, because there's just so much of it going on. You don't want to get caught by surprise and find out, something's moving against your position because you weren't paying attention. Like I said at the very beginning of this web seminar here tonight, tell as many people as you can about technical analysis and just plug them into the weekly market report. Even if you have a niece or a nephew, son or daughter who's thinking about getting in the markets but doesn't have enough money to do so yet, at least have them listen to this on a regular basis. My market reports are only 7 to 8 minutes long, if that. It takes such little time, but as you familiarize yourself with the terminology and the types of signals that we look at on the chart, it'll eventually just become second nature, and you'll just look at a chart and within seconds you'll be able to make the call and do it all on your own without my help. So again, thank you so much. It's my pleasure to present to you tonight. I hope you enjoyed it as much as I enjoyed presenting, and I'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.